Hi everyone, thank you for watching. In this video, I will go over Meta, all the numbers and what you need to learn from this company. So if you're bullish on Meta, last day has not been your day because a lot of bad things happen. However, I'm here to tell you that there is some good news ahead and I will get into that as well. So let's look at the numbers. You can see revenue was up about 28%. This is really good. It still means that the business is solid. Keep in mind, Meta has 3.6 billion daily active users. So that means that this is really a social media empire. It's not going away anytime soon. Ad revenue also up 27%, really good. However, there is some kind of note I want to make on this number, and I will get to that later. Also, net income down 14%. And this is really the number that Meta is being punished on, like compared to Microsoft, compared to Google. It really means that Meta is going down on their profits because of all their spending. And compared to Google, compared to Microsoft, there isn't really another backup generator that generates money for them. So let's get into that as well later on. CapEx, so this has to tie in with the net income. It means that they're spending like crazy and they're going to keep spending like crazy, all because Zuckerberg really believes that the inflection point is near of them making profit from all their spending. So cash flow also down 91%. This is a really ridiculous number. It's really low, but it still has to do with all the money that they're spending on RealityLabs and on their AI models. And of course, there's some legal charges as well, but I will not get into that deeply because it also is the same for Google. It also is the same for Microsoft. They all have lawsuits here and there, and it does affect the stock price a little bit, but just from like one day, it isn't really like a structural problem for them because they settle lawsuits almost every day, so it isn't really a big deal for them. However, I want to get to like the comparisons. You can see like Microsoft also have like a similar guidance, a similar pathway when it comes to AI. Keep spending, spending, spending until the data centers are done and until AI starts generating profits. So like the best AI is going to win this race. So Microsoft had some relief rally. Microsoft went up after the earnings call. It went up almost like 8%. And also it has to do with Azure. So Azure is really like their workhorse. And something Meta doesn't have. Meta doesn't have Azure. It doesn't have cloud like Google, which can keep growing in this AI world. And that's why Meta is kind of getting punished while Microsoft and Google kind of get rewarded. And you can see Meta it doesn't have that workhorse, that kind of that cloud computing that Microsoft and Google has. So that's why Meta is getting punished while the other two get rewarded. So I want to get into the inflection points as well. So you're probably wondering, Meta is going down, when it will go up, because it isn't like other stocks when the dip get bought because they think, oh, it's just like a temporary crash. This is a really structural thing, and investors are really scratching their head, when will Meta recover, because it isn't really like the indication when Meta will recover from this. So if you look at the upside catalyst, you can see like the ad engine is intact, and you're probably wondering, okay, if ad engine is intact, so it means they're still making money from ads. Why isn't the stock going up just like Microsoft? It's because ad isn't really something that you can scale. You cannot really double your ad prices and expect customers to pay for that. They will probably move to like a normal old-fashioned way of marketing, like television or like newspapers even, if social media becomes way too expensive, or they like create their own ads on their own kind of platform. So that's why you cannot really increase your ad prices that much. So that's why Meta's getting punished. Microsoft and Google are going up. Now, this is also a really good sign, is that BlackRock owns 80% of their El Paso data center. So that means that even though Meta builds this for themselves, they're going to use it to create their AR models. Isn't really, all the risk isn't really borne by Meta. It's also being divided between BlackRock and Meta. So that means that all the losses that might come from this data center isn't borne by Meta. It's also borne a lot by BlackRock. So this is good for Meta in case something goes really wrong with this whole AI hype, right? Then, of course, Meta has indicated that everything that we're going to build in terms of data centers, we might want to sell that excess capacity to other users so they can create their own AI model. So let's say you have ID, you want to build your own AI model, let's say your own AI series, like drama series, whatever. I'm just giving this really crazy example. And you can build it inside this Meta lab. So Meta has enough compute for themselves, for like their own AI empire. So they want to come to you to say, hey, you want to create your own type of ads, just come to Meta, come to our data center, you can do it. And this is a really good sign, actually, because if you create like this cloud revenue style, if you create like this revenue that comes from cloud computing and that you just kind of add to Meta and their revenue. Then, of course, RealityLabs, the drag is narrowing. However, it's like a good news in like a shitstorm of bad news, because this RealityLabs, I think they almost spent like 80 billion right now in losses, and it's just really not going anywhere. it's really like this failed metaverse thing that they're trying. However, I think they now have the indication that this stuff isn't working. Let's like stop spending on it and you know redirect that money elsewhere. Then, of course, the mechanical inflection. There is, of course, like this reason that the market is going to look at this, the numbers from quarter to quarter, and they say, okay, we now have hit like a bottom when it comes to cash flow, and just like the curve is now flattening in terms of spending, then we can expect cash flow to go up. So that doesn't has to do with anything like in the news. It just has to do with the numbers quarter over quarter. Then, of course, the downside catalyst. If Meta decides that we're going to keep spending and spending isn't really going to stop, then of course the cash flow is going to going to be down even more, and this is really bad for the stock price as well. And if you can see like the buybacks that the Meta just buys back their own shares if they think the shares are undervalued, they're now doing that with debt. So they're like raising debt, they're like issuing bonds, issuing loans, and just using that money to buy back their own shares. This isn't really a good business model. This kind of like indicates that you are really, really low on cash, but you really think your stock price is undervalued, so you keep buying it, you keep buying out your shareholders, but isn't really like good for your business model, for your balance sheet. Yet, of course, they are still guiding a little bit below when it comes to the next quarter. That means that revenue is going to be down as well as net profit. So right now we beat on revenue, but next quarter we might not even beat on revenue because the spending is going to keep continuing and it's going to continue even more than the money that they're pulling from ads. So this is really not a good thing. Then, of course, the argument I made earlier is that they have no cloud, they have no Azure, they have no like uh, cloud like Google, so they cannot really monetize that. So there's nothing that you need Meta for when it comes to AI, like except for the data centers that they might build. Then, of course, the legal things. Yeah, so Meta uses a lot of social media. The social media empire is used to also target the youth. They want to get people involved as quickly as possible. The earlier for them is the earlier the better for them. However, there's of course this risk that you don't want your kids to be on their phone all the time. So I really see this argument like from the other side as well, that this is really not good for children. Then, of course, I want to look at the external forces as well. So that means that how is the macroeconomic policy, how is Trump, how is Iran affecting Meta, right? You might wonder about that as well. So yesterday also there was this rate decision. You can see that the chairman kept the rate at 3.5, 3.75, but he was hawkish. So what does this mean? You're probably wondering what does hawkish and dovish mean? It means that hawkish means that he is actually in favor. Like if you look at the signal in his words, the way he tells things, the way the other chair members tell stuff, you can tell that they're more leaning towards raising the rates. They're not leaning towards lowering the rates. So that means that they're leaning hawkish. And if they're leaning hawkish, that means that right now they're not raising the rates. However, in their signs, in their signals, you can tell they might want to raise rates later on if something really bad happens with this, of course, the Iran conflict. So the dot plot, so that means that how many chair members are kind of indicating their path forward when it comes to rates. You can see that it's really that they in the future they might want to raise rates. So they all see higher rates in the future, all of them. So if you would ask them what is your path forward, all of these Fed chair members would say higher rates. Then, of course, the Iran conflict, this ties in with the rate decision. It says that, you can really tell that oil is going up and down. And every week there's a new headline saying, oh, the war resumes, then the war stops. And this is good for volatility, if you like volatility for your options. However, this isn't really good when it comes to like your real investment decisions, your personal finances, for example, your oil prices, the money that you pay at the pump. You don't want that to go up and stay up all the time. And it all has to do with the Iran conflict, that even like the oil refineries cannot decide whether they want to like lower the gas prices or higher it. They rather keep it high, right? Because there's more profit for them. And it's a lot of more safety for them as well. And of course, how does this tie into Meta? It ties into Meta because the daily active users are going down because of the Iran conflict. If the people are in conflict, they shut down the internet here and there. I remember I was in the Emirates when the whole Iran thing broke out, and they shut down the internet. And this is bad, of course, for Meta as well. Then, of course, the higher rates is bad for Meta because you discount your cash flow at the higher rate. It means that even you have some cash flow coming in, people are going to discount it at the higher rate. It's just like a fundamental in finance. That means that lower cash flow means lower stock prices as well. Then, of course, it all ties into the net income of Meta. And of course, this argument, it's going to keep coming back. It just says like the Google cloud is going up, the Azure cloud is going up. However, Meta just cannot say that we're going to be profitable from AI later on. Then, of course, Trump is backing bars. Trump has like a good good view of Bosch. He thinks Bosch is a really fantastic person. So that's why he's going to keep Bosch in place, Kevin Bosch of the Fed. And this is really bad for rate hikes and the rate policy. So how does the whole thing, inflation, translate back to Meta? It all has to do with the higher rates, like hawkish Fed, higher rates, higher inflation, higher oil, all leads to higher rates, and Meta being discounted at a higher rate, meaning that the stock price goes down. So this is the external effect that it has on Meta, but it also has this effect on other stocks. Now, internally, if you look at what Meta has in terms of employee strength, you of course have Zuckerberg. He's someone that built his whole social media empire. So for him, he really has proven his track record. However, you can see that what is he's telling you is saying like, hey, we have perhaps excess use for compute. So that means that he's willing to overbuild and sell that excess capacity to you. So this, when he brought this headline to news, I think he told us a few weeks ago that he might consider selling compute when he builds out the data labs, let's say the one in El Paso with BlackRock. Then this is really good for Zuckerberg. Then it kind of creates like this whole revenue line for himself. And of course, the AI talent war, people are leaving here and there. They're always leaving from, I think Google lost like two key AI people to Anthropic. Anthropic is probably also losing people to Meta. Meta is losing to Google. And so it kind of has this kind of rotation going on in this industry, that these people leave here and there just for better salary, better pay packages. So it doesn't really make this a good thing for Meta. Like if your key people leave, then it's not really good for you. However, with Meta, it's really the thing that Zuckerberg really drives this company. Zuckerberg is really the one that's driving the model. It's driving the business model. He really decides what goes, and he really keeps a strict policy on his employees. So a lot of people stay with Meta is because they do have like this good salary package. I don't really see people leaving Meta but I do see people leaving Google for Anthropic. So this is more the pathway that I see right now in the market. So of course, the 5-way to monetize AI. So this is really the thing that a lot of people are wondering about. How is Meta going to monetize besides selling excess compute? It's not really a good business model. If you overbuild something and you want to sell it, you still have to sell it at a higher price to recoup your cost. So what are like organic ways for Meta to grow is that they have their ad targeting uplift. So that means that ads are going to be more targeted. It means that what I'm going to see on my screen is different from what you're going to be seeing on your screen. It's really going to be tailored to you. And I think eventually, if AI gets really precise and really good, you will see the exact same thing that you need at that moment. And that's really what Meta is aiming for. Then, of course, the agentic AI. So they have business agents, they have people involved that they really want to cut on like physical employees. They want to like go back to like agents. So Salesforce has this as well, that you're not going to really be talking to a human anymore later on. You're all going to be talking to bots. Then, of course, the AI app. I'm not really sure what this is. This is really something new that Meta is going to design. It means that it's new, like compared to WhatsApp. It's kind of like Facebook, and it might be like Instagram, something like that. Then Meta Compute, this one I got over. And then, of course, the AI glasses. This is something that's already a bit of a new design, really hip. I can see the Ray-Ban glasses coming out. I see a lot of influencers already using that. They're kind of use that to make their vlogs, and it's way easier than just having that camera in front of you and just filming everything everywhere you go. You just kind of put on the glasses and film the entire thing and just narrate it. So it's easier. However, I don't see Meta owning this outright. I think a lot of knockoffs might be coming on the market that are slightly similar and have the same kind of goals that Meta has. So it's really small and it can grow. However, it isn't really that proprietary when it comes to Meta. So again, the daily active users of Meta is 3.6 billion. Keep that in mind. And of course, the headcount, it's slowing down. So that means that Meta is really reducing real employees, all to substitute them with business agents, so agentic AI. So this is kind of the internal things that are driving Meta and the forces that lead to more revenue. Then, of course, you want to compare Meta as well to Google and to Microsoft and Anthropic, and of course to other hyperscalers like Amazon. So you can tell, like when it comes to Google, when it comes to Microsoft and Anthropic, they all have their leading AI models. Microsoft via OpenAI has ChatGPT, Google has Gemini, Anthropic has Cloud, and Meta has Muse and Llama. And you can tell this isn't really the go-to AI model, when it compares to the other three. Like, of course, with the compute access, Google has their own compute, Microsoft has Azure, Anthropic has a multi-cloud model in place, like doing all these deals with Google, with Microsoft for their creating their models. And Meta is now building and renting out. And this is kind of how Meta is going to be. So it really isn't that pure play AI that Google and Microsoft has. Yeah, and of course, this all it will come back. Like cloud is driving Google, Azure is driving Microsoft, and Trophic has like this business models in place that they're using their cloud as well. So Trophic has cloud, and people are using cloud a lot. And Meta only has ads to drive their spending. So this again will really be bad for Meta. And when you look at the talent, when you look at the net position, you can see that Meta is really behind when it comes to talent. It really like tries to poach people from other companies to come to work for Meta. So Meta is behind because it doesn't have a real model and it has no cloud business to monetize the GPUs, whereas Google and Microsoft do have that. So Meta is like spending hyperscaler money without hyperscaling revenue coming in, and this is kind of the reason why Meta is getting punished severely. So let's get to the conclusion now. You can see that Zuckerberg is still saying we still haven't done everything that we wanted to do when it comes to AI spending. So he really isn't done spending anymore. He still want to keep spending. So let's get again. So this is going to be the conclusion that Meta isn't broken. It does have that operating cash flow. However, it's going to keep spending way and way more. So in conclusion, Meta does have the model. It does have the people in place. It does have the revenue coming in from ads. However, you cannot really scale up ads a lot. Like there isn't really like the same kind of demand for it compared to like cloud, compared to like Azure, because these are going to scale in similar rates when it comes to AI. However, ads are really not going to go up the same in the AI world. So this is kind of the issue that Meta is dealing with. However, if they're really going to build out those data centers, they're going to rent it out and see like a new revenue stream coming in, then this will really be good for Meta. And this is why Meta will go up eventually. So again, this is the conclusion. However, I'm really talking about the long-term story after all the data centers get built, after they really shut down that their AI, what's it called, metaverse thing, after they shut that down, then we really get to like the real value of Meta and what they can do with all the spending and how this is going to translate back into profits. So thank you for watching.